Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, the European business editor here at the IB Times UK. It is indeed a macro-dominated day around the region today. Dismal economic data coming out of the Eurozone showing a contraction of 0.6% in the final 3 months of last year, much deeper and much sharper than analysts had anticipated. It followed along from individual country data, most specifically from Germany, which showed a contraction of 0.6%, deeper and sharper than thought, and indeed in France, 0.3%, again, deeper and sharper than first anticipated. If we look at all of 2012, it's the first year since at least 1995 that the 17 members that comprise the Eurozone haven't recorded a single quarter of growth. You put that against some pretty limp export data around the powerhouse core of Europe, and indeed that record high 11.7% unemployment figure, which continues to trap business investment around the region. And the elixir is very, very, well, it's not one that gives a good taste, I think, to investors if they're looking for some kind of recovery in 2013. Now, you put this against the third consecutive quarter of retraction that was reported out of Japan this morning, and you get an even secondary, or I should say a deeper and perhaps secondary and tertiary concern from the investor perspective. And that, of course, is the aggressive rhetoric and policies of central bankers in order to try to revive growth. Now, some people say that the Japanese contraction means that the expansionary policies of the Bank of Japan, the low interest rates, the faster inflation target, the quantitative easing, are all now justified and may in fact be accelerated. This, of course, is likely to weaken the yen further, and it's already fallen 15% against the US dollar in only 3 months. Now, sterling fell to a 6-month low this morning, largely because a lot of investors looked at the inflation report from Bank of England Governor Mervyn King yesterday and thought, if he's prepared to look through inflation, in other words, to ignore it while it rises past target for about 7 years without raising rates, he may be prepared to look through it even longer. And his successor, Governor Mark Carney, may do the same. Now, this is all part of the central bank rhetoric that has people concerned and will be a big topic of the G20 finance ministers this weekend in Moscow. Check this story out on the IB Times economy page, because we get into that and we get into some HSB research which suggests currency wars are here to stay. It's definitely one of the biggest themes in financial markets for all of this year. That's it for now. We'll see you tomorrow.